You ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Wednesday, 23rd day of June, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of the office or away from your desktop, not to worry, just point any internet-connected browser to cfrn.net/live, and there you'll find a live real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live each day on our YouTube channel, which is easy to remember, youtube.com/CFRN. youtube.com/CFRN. Not only do we stream live each day, but we archive each daily show. Currently, there are over 1,700 daily live broadcasts archived there for your viewing and educational pleasure. So with that, we'll open with a word of prayer. Heavenly Father, we thank you today for your blessings, for your mercy, for your grace. God, help us to embrace and enjoy the life that you've given us to live. We're not here by accident. Each day we awake to breathe. You faithfully meet us with purpose. We pray that the Holy Spirit would faithfully nudge and remind us that we are children of God, your children, freed from the chains of sin by Christ's sacrifice on the cross. Bless our minds to remember and embrace the freedom, hope, joy, and peace that we have in you. In Jesus' name we pray. Amen.
Amen.
Amen. Well, happy Wednesday, everybody. I hope it's a happy Wednesday for you, wherever you are. Let me give you the numbers from around the world. These are the cash markets, the indices as they're called. Starting here at home in the U.S., the Dow down 17 points. NASDAQ up 31. S&P 500 up 4. The Russell 2000 up 7. Some pretty quiet trade. In the commodity basket, crude oil up 73 cents, trading 73.58 last. That's a gain of about 1%. Gold up $10, trading 17.8740 last. Silver up 35 cents, trading 26.21 last. It's a gain of a little over 1.25%. In the Asian markets at the close, Nikkei down 9 points, Shanghai up 8, the Hang Seng up 507. That's a gain of almost 1.75%, or a little over 1.75%. That gives us a mixed day in Asia, red day in the UK, and it's a mixed Radio Wednesday here in the US of A with the three major indices, NASDAQ, S&P, Russell, slightly in the green, the Dow, slightly in the red. So with that, we'll go to Michael, get a recap of everything that happened this morning in the live training room. After that, I'll come back, we'll take a look at the logic alerts, the concierge trade alerts, all that and answers to your questions. Michael, I can see your charts.
Excellent.
All yours.
Okay, here we go. All right. Good afternoon, everyone. Today is Wednesday, the 23rd day of June, 2021. If you've not taken a free trial with us, go to the homepage here at cfrn.net. Scroll down to where it says free 5-day trial, no credit card required. Click on that, and it's going to bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest training challenge so we can tell you a one-on-one training just for you. We really do one-on-one training. You just got to ask for it. Hit the send button, and you'll be sent a confirmation link. Once you get that confirmation link, you have to click on it. We don't know that you took the free trial until you click on it. Okay, and results. Yeah, today wasn't an easy day trading. We had a lot of trades and we didn't make a whole bunch of money. We made enough, but we didn't make a whole bunch. Today was one of those days if we would have stopped after our first trade, that would have been good. But anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 23rd day of June, 2021. Today we were break even on crude. We were up 17 ticks on gold and plus 4 ticks on the ES. Put us at plus 220 on the morning session. Today it took 8 minutes and one trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 25 trades. On the month now, we're up $7,380 a contract. That's over 16 trading days, averaging $461 per contract per 2-hour trading day. On the year now, we've gotten our goal on 118 out of 119 days. And that puts us at $79,910 a contract. That's over 119 trading days, averaging $671 per contract per 2-hour trading day. Okay, now let's go through and see what we did. I'm just going to start off with gold. Okay, we had gold is where we made the majority of the money today. We started off right in here on gold. Let's do this. This is where we got the goal for the day. Now there was much more than 10 ticks in it. I ended up taking 11 on this first tick, and we were in at $100 a contract. We're at 110 when I got the goal for the day. I got to fix that in the spreadsheet. But this ran up. We got into it right here. I think it was at 89.1, and it ran all the way up here to 91.7. So from 89.1 to 90.1 to 91.1. 91.7, so we had 26 ticks in this, but it ran so fast that by the time I was moving my stop up, I only got 11 ticks out of it right over here. Then we picked up another 4 ticks here to get us to plus 15. Then we stopped out, put us back down to plus 7. Then we picked up 6 ticks to get us to plus 13. Break even, 1 tick to get us to plus 14. And I know there's going to be some stuff that I didn't enter in here, but right here, it looks like we picked up another 3 ticks to get us to plus 17. Had a break even there, a break even there, a break even there, missed a trade there, missed a trade there, a break even there. Maybe I didn't not put things in. And then it just flattened out here at the end of the session this morning. So we haven't had anything during the break. Okay, there was nothing you could trade during the break. See right here, the cycle started in the middle. Stayed in the middle until the end of the morning session. Then it started to give possible long trades, but we had no trend. So step 1 was not there. All right, so we ended with plus 17 on gold this morning. On crude, let me double click here. On crude this morning, let's go back here. Our first trade right here, we had a break even. Our next trade, we stopped out minus 8 ticks, pretty much to the tick, and then it went up and did what it should have done. We had a break even there. Then over here, we picked up 5 ticks to put us at minus 3. Then we picked up 5 more ticks to put us at plus 2. And then over here, we picked up 5 more ticks to put us at plus 7. We got a break even there. 3 more ticks. No, 1 more tick to put us at plus 8. Then we stopped out again to the tick. So both stop outs on crude were pretty much to the tick right there and right back here. And then it went and did what it should have done on both of those. And that was where we ended with crude. We were looking for more trades, but they just weren't happening. All right. So we ended up with break even on crude. We were at +8 until we stopped out right here. Then we're back down to 0. On the ES, the ES was no easier to trade than anything else today. We started out here with a break even. Then we took 4 ticks profit on this one. This was our target area right here. And I was drawing leg lengths, but you can see we stopped going up right here at our target area, at least at this point. You can see the leg length went right up to the weekly trading zone. I don't know that we ever got up there. But we had 4 ticks there, with break even there, break even there, break even there, break even there, and that was it. So no, we did not ever get up there. At the end of the session this morning, I was saying, okay, well, this was the pullback area. That was on when it was looking like it was going to go down. I said, this is the pullback area and this is the target area. And well, it hit both of those. It pulled all the way back up to the pullback area and then went all the way down to the target area. This was my next area down below. It was right here, and I had one more that I had seen. Oops, down below that, which was right over here. Okay, now during the break, there was nothing in here during the break. You could say there was possibly something right here, but we had unbroken dynamic resistance, so you can't take a momentum trade into that. So there was nothing. Today was, well, yesterday we had pretty close to the same number of trades, but the trades actually did more. They actually went somewhere and did something. Today we had a bunch of trades. We had 25 trades, but the trades just weren't going anywhere. All right, back to the spreadsheet. Now I gotta fix one thing in here. This is a 110. Okay, so if you're gonna read the spreadsheet, you gotta read all the CFTC risk disclosures down at the bottom. Today's the 23rd day of June, 2021. Break even on crude, +17 on gold, and +4 on the ES. That's +220 on the morning session. Today took 8 minutes and 1 contract to get to the goal for the day. At that point, we're up $110 a contract. We took a total of 25 trades this morning. On the month now, we're at $7,380 a contract. That's over 16 trading days, averaging $461 per contract per trading day. On the year now, we've gotten our goal on 118 out of 119 days. And that puts us at $79,910 a contract, over 119 trading days, averaging $671 per contract per 2-hour trading day. Now, I know a lot of you guys say, well, you traded 25 times and you only made $220. And if you break that down per tick, that's not a lot per tick. But let me shut that off. But so you're talking about commissions after that, right? So with an $8 commission so far this month, if you took every single trade that I took, you'd have taken 308 trades. And your net profit with an $8 commission would be $4,916. And with a $5 commission, it'd be $5,840. Because I know a lot of times people see this and they say, well, didn't you just get eaten up by commissions? And the truth of the matter is, yeah, today it did. It didn't get completely eaten up, but a lot. With 25 trades, that's, you're not going to make a lot of money if you're just taking a little bit for every single trade. I mean, still, you're taking a little bit for every single trade, so you do end up making money. But today was one of those days where it just seemed to churn. Anyway, let's get back here to taking a free trial. If you've not taken a free trial with us, go to the home page at cfrn.net as soon as it loads up here. And scroll down here to where it says free 5-day trial, no credit card required. Click on that. And once you click on that, you will be brought immediately to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us your biggest trading challenge so we can tailor one-on-one training just for you, and hit the send button, and you'll be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click that link, we don't know that you took the free trial, so you got to make sure you click on that link. All right? All right, guys, that's it. With that, I'll pass it back out. Studio A, fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. Recap of the recap.
Today it took 8 minutes and 1 trade to get to $110 per contract.
Good job.
Thank you.
As Michael said, difficult day in the markets. The most recent recap that I have for Logic 247 was the one Valerie published this morning at 8:15 a.m. Eastern. There have been some alerts since then, and so as soon as she has time, she'll update that. But as of 8:15 this morning Eastern, we're in week 151. Oh, and there's that recap I was just speaking of. Just popped up on my screen, so let me grab that. Thank you, Valerie. Wasn't trying to rush you there. I just figured you had stuff going on. So let me just format this for my screen. There we go. Okay. Talk about the same. Except there's some fresh alerts out. Alright, we're in week 151 of Logic 247. Logic 247 is our around-the-clock Emini alert service. The alert channel opens for business Sunday night at 6 p.m. Eastern and stays open around the clock until Friday afternoon at 5 p.m. Eastern. The Globex markets are open from Sunday night at 6 p.m. Eastern to Friday afternoon at 5 p.m. Eastern, with a 1-hour break Monday through Thursday. So today's Wednesday. The Wednesday session officially ends at 5 p.m. Eastern. Tonight at 6 p.m. Eastern, the markets will reopen, and that will be the beginning of the Thursday session. So far this week, since Sunday night at 6 p.m. Eastern, we've issued a total of 25 alerts, 4 never triggered, still waiting on the results of 7, 16 actionable alerts, of which 6% would stop out based on not risking more than $300 per contract per trade, less when possible, using market structure and a very simple 3-step process that we teach all of our traders. In the live training room, we use a fast chart or a fast time frame or range chart, because the purpose of the live training room is for Michael to be able to teach you our methodology, our strategy, the underlying principles, all of that. If we used a 30-minute chart, like I do for the alerts, then you might go through a 2-hour session each day and only see maybe 1 or 2 triggers. By using the faster time frame, you're able to see many triggers, many trade setups, full execution, exit, everything, each day during the 2 hours. We're able to do that because our methodology and our strategy is fluid across all markets and all time frames. Price flows on a 1-minute chart the same way it flows on a monthly chart, a weekly chart, or even a range chart, from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Some people will tell you, well, you can't trade support and resistance these days. That's horse and buggy. That's old-fashioned. We've got algorithms now and all kinds of fancy and expensive indicators and oscillators that they try to convince you can predict the future, but they can't. Nobody knows what's going to happen next in life or in the market. That's the way God intended it. When He created Adam, He gave Adam all sorts of qualities and abilities, but a couple things He did not give Adam. He did not give Adam the ability to change the past or to know the future. And those two things are inextricably linked for eternity. And the way most training organizations seduce you out of your money is through the implication that they have in fact cracked the code, and that they can now, through their crystal balls, tell you with certainty what's going to happen next. Well, depends upon how long you've been trying to learn how to trade. and how many different things you've sampled and how many tens of thousands of dollars you've spent, you now know that what I'm saying is true. No matter how good it looks going in, nobody, not man nor machine nor algorithm, can predict with certainty what will happen next in the market. However, once you understand market structure and how price flows, using our methodology and our very simple indicators, you can know with a great degree of probability what the next high probability move is in any market in any time frame. Now that's a big statement, but it's true. Our methodology and strategy is fluid across all markets, all time frames. Now, 20% of the time, the market does not do the next high probability thing. How do we know that? Well, over the last 151 weeks, we have issued 7,652 individual alerts. Now, these alerts are based on current price action, and they are sent to our members via our private Telegram channel before they trigger, with time built in for you to get to your computer, study the alert, study the chart, and then in the beginning you trade it in your simulator or demo account. That's the purpose of the alerts. Some people just use them to trade and make money, but if you do that, you're missing the bigger opportunity. The bigger opportunity is you actually learning how to find these windows of opportunity in the market. Remember, price goes from support to resistance, back to support, back to resistance, over and over again and again. The area between support and resistance, we call that I call it a window of opportunity. And so the alert, when your phone makes the telegram sound, or your computer, or your tablet, when you hear the telegram sound, it's not a call to rush and put on a trade. It's a call to finish what you're doing, go to your chart, study the alert, study the chart, see the window of opportunity, and then again, in the beginning, trade it in your demo account as you're learning to apply everything that Michael teaches you in the live training room to the 30-minute chart. All of the alerts are based on a 30-minute chart. Now, at some point, you'll make a decision after you become a passport holder. What type of trader do you want to be? Do you want to be the trader that comes in every day, grabs a couple points out of the market, and goes and do life? Or do you want to be the trader who sits in front of the screens most of your waking hours, looking for every tradable opportunity in the market? And there's no right or wrong answer. It has to do with your own personality, your own temperament. So when you become a passport holder, you receive the 2420 blueprint. Now the blueprint's designed to help you go from 1 to 20 contracts over a period of 24 months. When you first start, you're in your demo account, trading in SIM. You'll stay in SIM until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you reach that goal, the blueprint will give you the green light to go live with one contract. Once you go live with one contract, your goal then is to increase your account balance by $2,000. Once that happens, you'll get the green light to add a second contract. Now the second contract is added with profit you earned trading one contract. The blueprint will always notify you when it's acceptable to add an additional contract, but you only add one at a time, and you only add additional contracts with profit you earned in the market. This makes it much more difficult to blow up your account. In order to blow up your account, you literally have to break a whole lot of rules Do the opposite of what the blueprint teaches you, and what Michael teaches you, and what I try to teach you. Once you've decided what kind of trader you want to be, you're going to write a business plan and a trading plan. 9 out of 10 traders fail. That's just a statistical fact. Also, 9 out of 10 traders don't have a teacher, not a live instructor who teaches them daily and allows them to ask questions and get answers in live markets. But 9 out of 10 traders don't have a business plan, they don't have a trading plan, and they don't have around-the-clock support, which we provide via our Telegram discussion group. Now, if 9 out of 10 traders fail, and again, that is a statistical fact, simple math tells us that 1 out of 10 actually succeed. If you find one of those 1 out of 10, ask them this question. When you started, did you have a teacher? 9 times out of 10, they're going to say, well, of course, how else would I learn? If your career goal was to become a doctor or a nurse or an airline pilot or a plumber or an electrician, you know immediately up front you're going to have to find someone who can teach you how to do that particular job. But because trading has a low barrier to entry, and by that I mean if you have a few $1,000s to put into a trading account, you, without any kind of training, without any license required, you're allowed to go out and promptly lose all your money. Almost seems like that should be illegal, but it's not. In fact, all the sexy websites encourage you to do exactly that. Fund an account, use this, magical set of indicators or these mystical oscillators or this fancy algorithm we have, and pretty soon you'll have your toe in the sand on the beach somewhere, living the lifestyle of the rich and famous. Again, if you've been trying to learn how to trade for any length of time, well, that's not how it works out. Again, over the past 151 weeks and 7,652 individual alerts, we have statistical data in the public domain that tells us 20% of the time the market does not do the next high probability thing. The reason we get into a long trade, or anyone gets into a long trade, would be because there's more buying pressure than selling pressure. Getting into a short trade is because there's more selling pressure than buying pressure. In the midst of a trade, often for no obvious or apparent reason, the order flow can switch from bullish to bearish. If it does, instead of hitting your target, your stop gets hit. And you don't spend any time complaining, making excuses, or licking your wounds, because you know that's simply a part of the business, that on average 20% of the time the market will not do the next high probability thing, and so you just go look for the next window of opportunity. Trading is a business based on probabilities. The second you make it about anything more than a probability, you might as well hang up the mouse and go home. Now, along with the logic alerts, which are based on current price action, our original alert service, the concierge trade alerts, those are based on historic price action. They do not come out around the clock as opportunity presents itself. This is published as a static report every evening shortly after the Globex open. Last night it was posted a little later than normal. 8:40 p.m. Eastern. Globex opens at 6 p.m. Eastern. There's 2 numbers for each market. If you want to grab a screenshot, you're certainly welcome to. Once this report is published, If price starts trending towards 42.42, that's bullish, and our strategy will look for opportunities to buy the market, buy the dips. If price starts trending down to 42.22, that's bearish, and so our strategy will look for opportunities to sell the market, sell the rallies. The CTAs cover the S&P, the Dow, the Russell, crude, NQ, gold, and silver, just like the logic alerts do. The big thing to remember, the logic alerts, which come out in real time before they trigger, that's based on current price action, while the CTAs are based on historic price action. And when those two stars align, that's where you'll find some of your best high probability, low risk trading opportunities. So with that, we'll go now to a daily chart of the S&P 500 E-mini futures, where we have a daily doji. And we'll refresh this chart just to be sure we've got a good chart to work with. Okay. Daily doji. Now, this could become a couple different things. It could become based on how we closed the session. Do we close near the high of the day, taking out yesterday's high? This is the all-time historic intraday high, 42.58 based on the September contract. This is the all-time historic closing high put in on June 14th. The market closed at 42.46. We have a possibility of putting in a new all-time historic closing high today if buyers keep buying. It takes financial commitment for the markets to rise. For the markets to fall, all that is required is that buyers stop buying. Sellers spot that, come out of the woodwork, and this happens. Only use a couple of very simple indicators. The green line, we call that the BBC. It just stands for bull bear cross. When price crosses above it, we're bullish and anticipate higher prices. When price crosses below it, we're bearish and anticipate lower prices. The other indicator is called CFMA1. I refer to it as blue and climbing or red and falling. One is bullish, represents support. The other is bearish and represents resistance. We dipped below the BBC back on May 11th. We even had a bearish cross on May 17th. On this day, May 20th, price managed to close back above the BBC after a few sessions below. And so we had a leg and a retracement back to the BBC. Now the pullback to the BBC holds more often than it doesn't, not just on the daily chart. Remember, everything Michael teaches you and everything I'm explaining to you now is fluid across all markets and all time frames. Price, we actually spiked the BBC on this day, but before the session ended, buyers came in, drove us back up. When the session opened at 6 p.m. Eastern on this day, price dropped back to the BBC, where once again the pullback held. It holds more often than it doesn't. And that led us to our all-time historic closing high and intraday high. When price finds resistance that it cannot overcome, when buyers literally stop buying, and I'm talking the large institutional buyers, sellers come out of the woodwork and do this. On our first trip down right here to the BBC, we spiked it but closed above it. Following session, we spiked it but closed above it. And then on this session, price ran into the step line, which when approached from below represents resistance. That sent us down to the 50% Fibonacci retracement of the last leg up. Now the last leg up is from May 13th to the all-time historic high to where we are right now. On the following session, we spiked the 50% fib. Buyers came in very strong, drove us back up through the BBC up to red and falling. Now red and falling represents resistance. So when this session opened, price initially dropped, but then buyers came in, drove us up to the high on yesterday's high at 42.45 half, and then we closed the session at 42.3675. So today's session, which began last night at 6 p.m. Eastern, we have put in a higher high. There is a possibility, if buyers don't keep their foot on the pedal, we could end up with a bearish engulfing candle on the session. That's not a forecast, it's an observation. A bearish engulfing candle is when the current candle, here's a good example. As you can see, this red candle has a higher high than the previous day and a lower low than the previous day. A bearish engulfing candle, especially on a daily chart, is one of the most bearish candlestick patterns. And that bearish engulfing candle, which we talked about on the day that it was happening, the possibility of it happening, and then after it happened, well, that's what took us down to this low on May 13th. Buyers recovered. We had a leg and a retracement, a leg and a retracement, a leg and a retracement, and now here we are. We've already traded above yesterday's high. If buyers keep buying and we close up in this area, even if it's a red candle, that has a bullish connotation because we overcame a couple of major obstacles here. If that doesn't happen and price were to close below yesterday's low, or even trade below yesterday's low, which was 42.0575, that would be a big drop, but if we can rally that much in one day, we can certainly drop that much in one day. That would lead us to then switch our focus from the bullish side on the daily chart to the bearish side. Here's the 24% Fibonacci retracement. It lines up right now with the daily BBC and the step line. So even though red and falling is a bearish indication and represents resistance, when price is above it and drops to it, it can become support. If that support does not hold, then we would anticipate support at the step line, at the daily BBC, and the 24% fib. So we have three good reasons to anticipate support around this 4200 area. If that support doesn't hold, then the next fib retracement is the 38, which lines up with this swing low on this day. And then there's the 50 that this rally was built off of. Below that, the 62. Now, just above this 50% fib, we had a bullish cross. We've kind of already dealt with that. A bullish cross on any time frame that leads to an extended move, when price revisits that area, will almost always act as good support, at least on the first approach. We saw that unfold here. So we had two reasons for the bounce: the bullish cross and the 50% fib. So where and how we close today, of course, as with every day, is important. Now we can draw a little trend line. across the top here. So initial support, low of the day, 42.30.75, and then 42.17, and then the 4200 area. Fibs are an area. Yes, they do print an exact price point on the chart, but over time you'll learn they are an area. Just as weekly zones, daily zones, the CTAs, it represents an area. Okay? So with that, we'll go to the 30-minute chart. If you did not grab a screenshot of the CTAs and you want to, you certainly can. So very quiet sideways session here. The vertical line represents the separation of the Tuesday session and the Wednesday session. There's the Monday session. Now the CTA was for last night, so even though the line extends all the way across, it doesn't apply to these previous days. They had their own CTAs, or daily trading zones, if you will. Our weekly trading zones, which is the gray line, we have a current weekly zone at 42.48/49. We've published these zones for our members since December 14th of 2009, over a decade. Only 3 things happen at a weekly trading zone. The most likely thing is consolidation. The second most likely is rejection. The third and least likely, but it does happen 5 to 10% of the time, is the slice. That's where price slices through a weekly zone like it's not even there. Now the CTAs, the concierge trade alerts, you can, everything you know and understand about the weekly trading zones, you can apply those to the CTA as well. As you can see, consolidation. And we finally managed to punch through. Here was the opening candle last night. Again, it wasn't until the market opened at 6 p.m. Eastern. I didn't get the CTAs out until 8:40 p.m. Eastern. On every alert, logic or concierge, if it's a long trade, the logic alerts often have multiple targets. T is initial target, and then potential resistance would be target number 2, and potential resistance target number 3, number 4. But the final trade to target on every long alert is the weekly trading zone overhead. On a short alert, the weekly trading zone below is the final trade to target. So as we approach the CTA, we consolidate it, and then we hit the final trade to target at 42.48. So that's 6 points at $50 a point. It's $300 per contract trade. We got back below the trigger, triggered again, which is not unusual under normal conditions. Once an alert triggers, logic or concierge, there is a greater probability of it triggering multiple times than not triggering multiple times. So from 42.42, we put in a high at 46.25. It's 4.25 points. We're now back below the trigger, but we're also below the BBC, which means we have to start thinking about trading on the short side. Also, blue and climbing looks like it's about ready to become red and falling. And you'll see how blue and climbing escorts price to the upside and escorts it to the downside. Right now, we're in a sideways market. Our indicators do a good job of helping you find these windows of opportunity, these high probability, low risk trade setups. They also do another job, which might even be more important, and that's helping you know when it's best to stay out of the market. because when these two indicators, the BBC and the CFMA1, when they go flat like this, there's indecision in the market. Right here, you've got a candle above, a 30-minute candle above the BBC, and then below, and then above, and then below. This is a market seeking direction, a market looking to find itself. And until the market knows what it is trying to accomplish, then it's very difficult to know what the next high probability move will be. Here, we have a bullish cross. Price starts to move higher. We take out this swing high. Well, we know that the market is trying to get to the weekly zone overhead. In fact, price is always trying to get to a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, if price is above the BBC, it's trying to get to the zone overhead. If price is below the BBC, it's trying to get to the zone below. We have a bearish cross. Price looks for all the world like it's going to try to get to the zone below. Buyers come in, send us back up. Buyers stop buying, sellers take us down. This is a market right now to avoid. You want to allow price to take out this swing low. Now there is a window of opportunity here, but that would be down here. The market needs to either overcome the most recent swing high, and this swing high is so close to this swing high. So really we need to see price get, we could trigger again at 42.42, but you have to expect resistance now at 42.46. The market has established 42.46 and a quarter as resistance. Now, why 42.46 and a quarter? Because at this moment in time, no trader, institutional or retail, anywhere in the world, was willing to pay 42.46 and a half. If even one trader had fat fingered a one contract trade to buy 42.46 and a half, then that would be the swing high. That's true even on the daily chart. Okay, the all-time intraday high is 42.58 and a quarter, because at that moment in time no trader was willing to pay 42.58 and a half. The all-time historic closing high, the same thing is true. We closed at 42.46 and a quarter because nobody wanted to pay 42.46 and a half. And we did not close on the high of the day, so it wasn't because the clock ran out. That little bit of wick up there, we weren't able to overcome that. Price had a high that day of 48 and a half, but we closed at 46 and a quarter because nobody was willing to pay 42, 48, 75. And the fact that we have this daily doji, which is one of the most important candlestick signals that you'll want to learn. If you Google CFRN, The Secret Life of Candles, there's a PDF that you can download for free, and that will help you learn the 10 major candlestick signals and patterns. There's a couple hundred. The idea of candlesticks was created by Japanese rice traders over 400 years ago. So this isn't the latest shiny thing to come down the pike. This is something that's been used for many, many years to trade all kinds of markets. A candlestick is simply a graphic representation of investor or trader sentiment for the market and time frame being observed. The doji represents indecision between buyers and sellers. Okay? It's obvious who is in control on this day, and it's obvious who is in control on this day. Right now, We have a long shadow or wick, as it's called, to the upside. We have a small wick or shadow to the downside, and price is doing this. A trade here is more a gamble than anything else. Okay. All right, let's go to the Dow. Here's an example of the CTA acting as that iron curtain, okay, like a weekly trading zone. Again, you can think of them as daily trading zones. Now, these weekly zones, once they're published on Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. So on the S&P, we ran right up to the zone 4248/49. That is the second to the highest weekly trading zone this week. The highest weekly trading zone is at 4329/4330, which also is a perfect time for me to grab the control panel, go to File, go to Workspaces, click Save As, type in today's date, 06/23/21, save it. Now, if it's sort of a rainy overcast day or drizzly overcast day in Phoenix, which is unusual for June, but should the power go out or my computer crash for some unforeseen reason, I just saved all of my workspaces by going to the control panel, File, Workspaces, Save As. I just use today's date as the file name. And so in the event of a crash, once I get things up and running again, all I have to do is load the workspace with today's date, and everything will come back just as it is, including all of the drawing objects. Really good idea. Now, I know some of you turn your computer off when you're done trading. Others, like myself, leave your computer running around the clock. Whichever way, when you close the DT Pro platform, it automatically saves the current workspace. But if you're the person who leaves your charts running around the clock, then you'll want to set an alarm, set a time, something to remind you once a day to go and save those workspaces. It's very important. Okay, so we've covered the S&P, the Dow. Here was the open last night. The CTA was at 33,942. Actually, it was 33,940. As you can see right there. So I should correct that here. Okay. So we consolidated for an hour, and then buyers tried to take us to the zone overhead. We put in a high at 962. So that's 22 points at $5 a point. It's $110 per contract traded. And we've not had a second trigger, just the one. Price pulled back to the BBC, which holds more often than it doesn't. We consolidated for 3.5 hours. But you'll notice the blue and climbing turned to red and falling. Okay. And at 7:30 a.m. Eastern, the market turned back up. And basically, this was what we call a head fake. A head fake is when the market appears like it's going to do one thing, but instead does something else. So at 8:30, we got above the BBC, but the 9 a.m. candle from 9 a.m. to 9:30 took us back below the BBC, the step line, red and falling. And now we have the Wall Street Open at 9:30 a.m. Eastern. This is basically a doji, even though it's got a little bit of a body to it. Price comes down, buyers come in, drive us back up. Now, if you look here, the last bullish cross happened right there. And if you follow the horizontal line on my cursor, look where the current candle low is. Let me make it real easy for you to see. A bullish cross is when the blue line gets above the green line. It's that simple. And as I explained earlier, when we have a bullish cross that leads to an extended move, when price revisits that area, the first time we touch that area, we expect it to be good support. And the opposite is true of a bearish cross. When price revisits the area of the bearish cross, we expect that to be good resistance. Okay, and so price was faithful, came right down to the bullish cross, and we've caught a bounce. Not a big bounce, but the support is obvious and evident. If on the next candle we trade below this area of support, then we have a window of opportunity roughly 33,710 down to 33,665. This represents support. Why? Because that's where buyers came in and drove us up to the high of today's session. So as we drop, we need to take out this swing low, window of opportunity. If price trades through this window of opportunity and trades through this area of support, then our next window of opportunity is right there, from roughly 33,600 down to the weekly zone at 33,510/15. Now, price is above the BBC. It attempted to get to the zone overhead and failed. Price is now below the BBC. So the final trade to target on any alert would of course be the weekly zone below. On the Russell, the CTA was at 22.99. And on the first trigger there, it took us all the way up to 2300.8. So not quite 2 points, 1.8. 2 points, $50 a point would be $100 per contract traded. We got the bearish cross, we got back above the BBC, we triggered again. This time price ran up to 2307 and a half, so 8 point move at $50 a point, $400 per contract traded. And price got back below the trigger and triggered again, back below the trigger, touched the BBC, which again we expect to be good support until proven otherwise. It took us to this swing high. We're now printing a red candle on the Russell. If price drops, we expect the BBC to be good support. If we spike the BBC, this bullish cross did not lead to much of an extended move, but reasonable to expect support there. If price trades through the BBC, through that previous bullish cross, and that gives us a window of opportunity down to this low. And if price were to trade below that low, we have a bullish cross right here. And so we would expect that to be good support, giving us potentially, based on market structure as it happens, a window of opportunity in this area here. Trading through that window of opportunity would then trigger us on the short side. The short CTA last night was 22.75. And then we have a weekly zone below at 22.66. So as long as price is above the BBC, and it's trying to get to the zone overhead. When it's below the BBC, it's trying to get to the zone below, above or below. Now, just because buyers get us above the BBC and get us above the CTA, there's no guarantee that we're going to actually make it all the way to the zone. That's why the logic alerts will have an initial target, then a second target, a third target. It's called potential resistance. That's how it's logged into. I'll show you. Here's crude. B is buy. T is initial target. Potential resistance is the second target. Potential resistance is the third target. Then the final trade to target is the weekly trading zone above. Okay? And that's how it's been done for the last 7,652 alerts. Mark Douglas, in his book Trading in the Zone, said that to properly evaluate any type of methodology, strategy, any type of indicators or oscillators, you got to have a minimum trade size of 20. It's got to have at least 20 trades from start to finish to do any kind of evaluation to find out if it does give you a definable edge. Mark would be proud, if he were still around, to know that our sample size is now 7,652 individual alerts, which, as I explained, on average 20% of those do not do the next high probability thing. Okay, NQ. Quiet sideways markets. CTA was at 14,297. Go back to my CTA page. That's right, 14,297. And so on the first approach, Iron Curtain, the swing high, 43.01. I'm sorry, 14,301. So that's, 4 points, $20 a point, not quite $100 per contract. Price gets back below the trigger, triggers again. Important prices, important areas are almost always tested. This time we hit 143.13. That's 16 points. That's what the market made available, and the NQ pays $20 a point. Price gets back below the trigger, back below the weekly zone, and this is the opening candle on Wall Street today, the 9:30 to 10 a.m. candle. We hit the trigger and put in a swing high at 143.15. So 18 points, $20 a point, that's what the market made available. But again, see the indicators, how they're flat? Okay. There's a lot of good trading opportunities here. Not here. This is a market looking for direction, a market trying to make up its mind. Now, it made it to the weekly zone at 14,282 and promptly put in a double top just above the CTA. Price now is back below the BBC. Blue and climbing has turned to red and falling. And so a window of opportunity here would look like this. And if price trades below that low, then we've got lots of room to run down to the weekly trading zone at 14,165. Again, these weekly zones come out to our traders every Monday morning, 6:15 a.m. Eastern. We've published them since December 14th of 2009. And the way price behaves at the weekly zones has not changed in all that time. It has remained consistent. It's not a mystery. It's not magic. It's simply math. Crude oil. The CTA for crude last night at 73.50. The initial trigger took us up to 56. That's $60 per contract. Back below the trigger. This time $80 per contract. Back below the trigger. And this move took us up to 74.25. So that's $750 per contract traded is what the market made available. Price has dropped back below the trigger. Actually, we had another little trigger here. Now, not all triggers are created equal. If price rallies back up to the trigger, I would not be interested in this as a trade because red and falling represents resistance. So I would only consider it once price gets above these highs, gets above red and climbing, so the window of opportunity, and if I'm not mistaken, there may be an alert in the logic channel right now for this very window of opportunity. If these two highs are taken out, then there's lots of room to run on the upside to the highest weekly trading zone this week for crude, which is $75/75.05. Here's gold. Gold triggered more times than we probably want to take the time to count. 1781. No, I'm sorry. Stand by. I didn't move the line last night. The CTA was actually 1789. So, let me fix that. Okay. So now that I've put the line in the right place, let's see if I got the other one in the right place. 1769. So now that I've put the line in the place where I actually published the alert, 1789, we put in a swing high at 95.6. So basically a 6-point move. Gold pays $100 a point, $600 per contract traded. Price is now back below the BBC. This low's potential support. This low's potential support. Even this low. So it's kind of like a minefield, right? There's lots of room to run down to the weekly zone at 1774/75. Lots of room to run, but obstacles all the way down. Doesn't mean you can't trade it. Just means you need to be aware that the market could find support here, here, or here. And last on the list, silver. 25.95 was the CTA on the long side. And we triggered and ran right up to the weekly zone, which we expect to be good resistance until proven otherwise. Resistance sent us looking for support, which we found at the BBC. The pullback holds more often than it doesn't. We consolidated here for a number of hours. This run took us back up to the weekly zone, where again it was good resistance. However, on this trigger, you have to be very careful because you got red and falling right overhead. This is what you want. You want blue and climbing. You want the step line on the left side of blue and climbing. That supports a long trade. Now, even though price did get to the zone, it first had to fight its way through red and falling. Okay? And then back below the trigger again, and again, and again. And this last trigger, which again, you've got that red and falling there, so you've got to be careful and cautious. The best opportunity, and of course, you know, anyone can look like a genius with a historic chart, so just be careful. When you go to webinars, things like that, where somebody's pitching you a methodology or a system, again, it's easy to look like a genius on a historical chart. This is why our alerts are published live in real time before they trigger, not after the fact. This is why Michael, when he's teaching you the methodology and the strategy every morning in the live training room, he's using live, real-time data, putting on and taking off trades right in front of you, because the idea is that he wants to teach you the basic trade setup that we use, with a couple slight variations. In the live training room, we only risk 8 ticks. Every trade, every market. What he's teaching you is that it's very important to always have a hard stop in place. On the fast 4-tick range chart, now it's not a 4-tick chart, it's a range chart where every candle is 4 ticks tall. And people say, well, how long does it take for that candle? Well, it has nothing to do with time. It's purely price. When price moves 4 ticks in one direction and then moves a tick higher, creates a new candle. So on a range chart, a new candle is dictated by price. On a 5-minute chart, or an hourly chart, or a 30-minute chart, candles are dictated by the clock, not price. No matter what market you're trading or what time frame you're using, the clock on the wall is always price. And so this big run here, which took us up to a high of the session 26.37, we've pulled back to the BBC, which we expect to hold. It holds more often than it doesn't. If it spikes the BBC, just as this weekly trading zone was resistance, 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 and resistance, this time around, we expect it to be support until proven otherwise. Once the market finds support and proves itself by starting to print a green candle, in our methodology and strategy, we'll look for opportunities to trade on the long side. Trading's not easy, but it can be simple. It's important to understand it's a business based on probabilities. You cannot know with certainty what's going to happen next, but you can know what the next high probability move is. Again, even if we spike the BBC, we expect it to hold as support. If we spike the weekly trading zone like we did over here, we spiked but it held. We spiked but it held. We spiked but it held. So once we have confirmation of support anywhere in this area as evidenced by the printing of green candles, then we will look for our window of opportunity to trade on the long side. Which brings us right back to the daily chart, where on the daily doji we now have a little bit of a green body. Okay, it's sort of a lackluster sideways session. Remember, just a few moments ago we had this red candle, and we talked about this being support. Price didn't even make it all the way down. The low of this candle was 42.3075. The low of this candle, 32 1/4. Again, under this set of conditions, we need to see price break and hold above this weekly zone, which we know is good resistance until proven otherwise, or we need to take out this swing low, which then gives us an opportunity to trade on the short side down to the trigger, which could potentially be support as we trade through 42.22. If that's how it unfolds, then we have a window of opportunity down to this bullish cross, next support level, this little double bottom, and then the weekly trading zone below at 41.90. And there you have it. Okay, time now for a good word for the day. Been talking the last few days about harmony at home and how important it is. Talked about that for the last 3 days. Today we'll change the topic. We'll talk about the secret to surviving hard times. Philippians 3:8. Nothing is as wonderful as knowing Christ. The entire passage reads, "Indeed I count everything as loss because of the surpassing worth of knowing Christ Jesus my Lord. For his sake I have suffered the loss of all things and count them as rubbish in order that I may gain Christ." The secret to surviving hard times doesn't lie in what you know, but who you know. You might say, right now I got more troubles than Job. Well, when the bottom dropped out of Job's world, he said this in Job 23:10. "He knows the way that I take. When he has tested me, I will come forth as gold. My feet have closely followed his steps. I have kept to his way without turning aside. I have not departed from the commands of his lips. I have treasured the words of his mouth more than my daily bread." That's Job 23:10 through 12. We all know what a troubled life Job had. He had a real rough patch. And Paul's life, well, that wasn't a picnic either. In 2 Corinthians 11:26 we read, Paul wrote, "I have been in danger from rivers, from bandits, from my fellow Jews, from Gentiles, in danger in the city and the country, at sea, and in danger from false believers. I've labored and toiled and often gone without sleep. I have known hunger and thirst and often gone without food. I've been cold and naked. Besides everything else, I face daily the pressure of my concern for all the churches." 2 Corinthians 11:26 through 28. Reading that list makes us ask the question, how did he do it? Paul knew the secret to surviving hard times. What was it? He allowed his troubles to drive him closer to the Lord. "I will boast all the more gladly about my weaknesses, so that Christ's power may rest on me. That is why, for Christ's sake, I delight in weaknesses, in insults, in hardships, in persecutions, in difficulties. For when I am weak, then I am strong." 2 Corinthians 12:9. Do you want what Job and Paul had? The good part, not the bad part. Then draw closer to the Lord. A personal relationship with your Creator. That's the secret to their ultimate success. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.